please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we told you first and now it's a done deal. It's the world's largest e-commerce deal. Walmart and Flipkart have put pen to paper in what can be described a bittersweet moment for Indian e-commerce and startup universe. The deal will mark the largest foreign direct investment into India and will surpass SR Rosneft deal. Shireen Ban joins in to take us through the key highlights of this particular transaction.
Well, it is a done deal. Just as CNBC TV18 has been reporting, Walmart and Flipkart have signed a definitive agreement. Now, as per that agreement, Walmart will buy 77% stake in Flipkart at $16 billion. This deal values Flipkart at just over $20 billion. Look at those numbers on your screen, awe-inspiring. Walmart will fund this deal through freshly issued debt as well as cash on hand. Now, this investment will also include infusion of equity worth about $2 billion in Flipkart, and that is going to be used to further its expansion, aid its growth. That has been made clear by the Walmart global leadership team. Now, let's talk about who is staying and who is leaving. Co-founder Binny Bansal is staying. In fact, Binny Bansal getting a big thumbs up from the global leadership of Walmart. The CEO, Doug McMillon, saying that we're glad that Bansal is going to continue to lead Flipkart going forward. Who else is staying? Initial investors like Tiger Global, Tencent, they will continue to stay on, and we are given to understand that they will hold on to their board seats as well. Microsoft will also stay on. So this is the chart of who stays in Flipkart. Now, who exits? The big one. Softbank, as CNBC TV18 has been reporting, is cashing out, and it's doing that along with Naspers. Co-founder Sachin Bansal is also leaving the building, and he will no longer hold any stake. Now, we also understand that Walmart is in talks with potential investors, and if things materialize, Walmart will reduce its stake in the future, but of course, it will continue to hold majority in Flipkart. Now, here is what is left. The Flipkart board composition is yet to be finalized, and Walmart expects to close the deal by the end of the year. So we could see some changes to what is being anticipated.
Okay, thanks Shireen for that. Well, the global team of Walmart signed the deal at the Flipkart quarters in Bengaluru yesterday. Listen in to their word on why the decision to back Flipkart and bet big on India.
I've been so encouraged by and impressed by what I've learned from this Flipkart team over the last few months as it relates to problem solving. They identify customer problems, other challenges in the business, and they innovate and they do it quickly. So part of what we're doing is investing in a country and a position, certainly a management team, leadership team, but we're also investing in a set of creative problem solvers. So it's not just what they've done before, but what they will do that causes us to be so optimistic about the opportunity.
Walmart will invest approximately $16 billion for an initial stake of approximately 77% in the Flipkart group. This investment includes $2 billion of new equity funding, which will help Flipkart accelerate growth in the future.
Okay, let's get back to our markets then. And back home on Dalal Street, the markets consolidated with a positive bias. The Nifty closed with a gain of roughly around 25 points odd. The Sensex hit a century yesterday. The mid-caps, though, they were relative underperformers, while the Nifty Bank managed to eke out some gains of around 0.25% odd. Ekta, tell us how trade set up today.
Okay, well, you know, Nigel, like you mentioned, it was quite a mixed day in yesterday's trade. We had the Nifty and the Sensex close in the green, but we had the mid-caps underperform. The Nifty Bank has outperformed on a week-to-date basis as compared to the Nifty. So that's an important measure to track, and that was probably fueled by ICICI Bank numbers as well. Now, FIIs, however, continue to sell. We saw it come down to around 94 odd crores, but surprise, surprise, we're back at around 700 crores in terms of a net sell figure for yesterday in the cash market, and we have the DIIs which net bought around 665 odd crores. Now, in terms of cues that we're working with in today's trade, it has to be Brent crude, which is top of mind. So it's closing in on $78 per barrel. We've had a lot of experts talk about how it could be $80 $90 to even $100 per barrel in terms of a forecast on the bullish trends of Brent crude. So that continues to be a concern, incremental concern for us. US markets ended higher yesterday, and the Asian markets should come up for you. The SGX is indicating that it could be a little bit of a flat start at this point in time for our markets. Let's see how we do in terms of the opening trade. What does stand out from yesterday's trade is that we are resilient at this point. Despite the headwinds from, say, the weakness or the high prices of Brent crude and the weakness in the rupee, we managed to have that kind of resilience come in for the Nifty and the Sensex. Now, in terms of the earnings, however, it's going to be a heavy day, and consumption continues to be top of mind. You've seen that with the Flipkart Walmart deal. So Asian Paints comes out with numbers today, Titan comes out with numbers, Z Entertainment, Nestle, all of these are these consumption stories we'll be looking out for. Then we have an emphasis, Adani Transmission, Apollo Tyres from the PSU banking space. Interesting to see Indian Bank, which is probably one of the interesting numbers to watch out for. Union Bank, Axo Nobel, Ujjivan, and in terms of earnings reaction, we have Eicher, Federal Bank, JSPL or OBC, Parag Milk, SIS, all of them which will be reacting to numbers. Nifty Bank expiry today, and like I mentioned, Walmart Flipkart deal will be in focus on account of the consumption story, and obviously we have the Karnataka elections, probably one of the reasons why we're seeing that kind of resilience come through.
You've given us quite a few stocks. Do you have more to add?
Well, yes, I'll be watching out for all of these stocks such as DMart as well as the Future Group stock, simply because of the kind of heady valuations the Flipkart Walmart deal has seen. And we have Eicher, where, it came out post-markets. It was a good set of numbers. The revenue was up around 34% year-on-year. Stride Shasun, they held that call post-markets on that deal that they've done in Australia, where the management said that the Apotex merger in Australia helps scale the market by 3 to 4 years. We have Jubilant Life, where Rakesh Jhunjhunwala really questioned the management on dividend yield as well as the US pricing environment. But important to say, he finished the conversation by congratulating the management on the numbers. Federal Bank, again, Rakesh Jhunjhunwala had a busy evening. He was on that conference call as well. And we have Fortis, where the board is going to decide that final bid today, Nigel. I think my head is just confused with all of the bids right now. And finally, we'll probably have one to concentrate on now.
Okay, Ekta, let's take that forward. For the time being, we'll slip into a short break. Up next is the day for Fortis. The board will meet today to evaluate bids that are received. More details when you're back. Well, it's the day for Fortis. The board will meet today to evaluate bids received and will take into consideration recommendations of the expert advisory committee. Ekta, run us through all those details. What's the analysis of the same?
Well, what we can expect today is that the board, like you mentioned, is going to consider recommendations of the Expert Advisory Committee. Now, remember that the Expert Advisory Committee consists of Deepak Kapoor and Lalit Bhasin. Renuka Ramnath had stepped down from that particular committee. Now, Stan C is the financial advisor. We have Cyril Amarchand Mangaldas, who's the legal advisor, and we have Arpud, which is the second independent advisor who is appointed in order to analyze all of the 4 binding bids. Now, in terms of the process, it was interesting because in that entire letter that was given to the exchanges by the old board members yesterday, they did highlight how exactly the process is going to be with regards to coming to the 4 binding bids. But I'll come to that in just a bit. The 4 binding offers which will be considered today include Manipal TPG, Munjal Berman, IHH, and Radiant and KKR. Now remember that Manipal TPG is completely binding. They don't have any due diligence that they're asking for. They're looking to merge Manipal with Fortis at 160 rupees per share, and there's an upfront offer of 2,100 crores via preferential allotment. They're looking to buy 31% stake of the private equities in the SRL diagnostic business for 1,100 crores. And obviously, all of them are asking for board changes, so I'm not going to go into that in much detail. Munjal Berman, binding. They currently own minority stake in Fortis. They're investing 1,800 crores totally. Upfront is 1,050 crores. Remaining 750 crores will be via warrants, which will be at 1,676 rupees. They're asking for a complete divestment of SRL at an independent valuation. That fund will be used to buy out RHT Holdings. IHH 4,000 crores total offer, 650 crores is binding. Remaining is 3,350 crores, which is based on due diligence, and it's a go, no go. So they decide to be in it or they decide not to be in it based on due diligence, which will be for 7 days. Radiant KKR binding bid to buy the Mulund Hospital only with an infusion of around 680 odd crores net. The enterprise value is 1,200 crores, and then eventually they have a completely different, structure which they are proposing for the entire hospital business as well as diagnostics. So overall, it's going to be interesting to see what exactly the board decides, and this will be based on the recommendations of the EAC or the Expert Advisory Committee. Obviously, I hope it's not a late night press release again.
Okay, the best wishes with you. Let's hope that in fact it doesn't come too late today. But moving on then, JP Infotech's fate hangs in the balance. Sources say that the company's creditors has rejected the resolution plan submitted by Lakshadweep. Ritu Singh is here with all those details. Ritu, tell us what happens next.
JP Infotech's case has been a complicated one from the word go, and now the company's fate hangs in the balance, as we understand from sources that the lenders have rejected the sole resolution plan that was on the table for JP Infotech. That was from Lakshadweep, which is a joint venture between Suraksha ARC and Dosti Realty. We understand from sources that as many as 85.7% of the lenders voted against this resolution plan, which we understand was close to 7,350 crore rupees, of which about 4,000 crore rupees was for the land bank, about 1,200 for cash repayment, and the remaining for long-term NCDs and some equity to the lenders. But this offer, we understand from sources, was not acceptable to the lenders, as they felt that this offer undervalued the company. Do remember that the liquidation value of the company is close to 12 to 14,000 crore rupees, and the debt of the company is approximately 10,000 crore rupees. So the lenders were hoping for a lower haircut than this as well. So what is next for the company now? Well, if it is to be liquidated or not, or whether a fresh round has to be called for, that call is yet to be taken. But the final say will rest with the Supreme Court. So that is where the case, that is back where the case will head. For now, no resolution on the table for JP Infotech.
Okay, all right, Ritu. Thanks very much for that. Time for a break now. But up next, Eicher Motors posted a strong set of earnings. We'll get you. Well, we have Eicher Motors, which posted a strong set of numbers post markets yesterday. We have Sonia joining in to tell us more about it. Sonia?
Well, thanks a lot for that. Yes, it was a decent set of numbers that the company posted, largely in line with what the street was estimating. Now, there was a one-time loss that the company has booked, because of which the profits looked like they were below street estimates. That's because of the winding down of the Eicher Polaris JV. But stripped of that, it was actually a good set of numbers. The margins have gone up about 100 basis points on a year-on-year basis. And more importantly, at the conference call as well, the management was quite confident. They did mention that they are seeing volume growth pick up in places like Maharashtra and Karnataka. Remember, last quarter they had indicated that the volume growth was a bit sluggish in Q2 and Q3, but now they are saying that there is a pickup that they are seeing. Uttar Pradesh has also witnessed a very strong growth because of an improved distribution network, so that's always good, the pickup in North India. And they did mention that, at this point in time, they are willing to take some price hikes in order to protect their margins, although they won't be taking the price hikes immediately. So their aim really is to protect their margins. And they also mentioned that their capacity guidance continues to be the same as it was before, 950,000 for the full year FY19. So decent set of numbers coming in. It's just that the profits were hit because of a one-time exceptional loss. Back to you.
Okay, all right, Sonia, thanks so much for that. But Asian Paints, that's going to be the other big number that we're watching out for today. Mangalam joins in to run us through his expectations. Hey, Mangalam, morning.
Morning, Nigel. So about Asian Paints, as a stock, the company has underperformed the other peers as well. So we'll have to keep an eye out on what the numbers are. Given the last 3 quarters, they have disappointed. As far as our poll is concerned, we're working with a revenue growth of close to around 11.5%. The EBITDA margin, that's likely to expand by about 90 basis points. 18.9% is what we're working with, and as a result, we'll see a net profit growth of about 12.5%. The most important number to watch for in Asian Paints is the volume growth, and that is the domestic standalone volume growth. So we'll have to keep an eye out on the management commentary, which says anywhere between mid to high single-digit volume growth. We're working with a number of close to around 7 to 8%. The 11.5% top-line growth that I'm talking about will come from 5.5% price rise that the company has taken over the last 1 year. The margins, while they're likely to expand as far as the street expectations are concerned, just bear in mind the fact that Kansai Nerolac reported their numbers, and there is a downside risk to margins given those numbers did disappoint on the operational front. The street believes that the 5.5% price hike that the company has taken will go ahead and protect or perhaps increase their margins as well, but we'll have to definitely keep an eye out on the gross margins as well as the EBITDA margins that the company posts. More importantly, watch out for the management commentary on rural demand, as well as keep an eye out on what they're talking about their home improvement business, which is kitchen fittings as well as bathroom fittings, whether they announce any sort of acquisition or not. Any acquisition will be margin dilutive, return on capital dilutive in the very near future, but we'll have to watch out for all those developments there too.
Okay. Well, what about Titan, Mangalam?
Titan, well, solid as gold sort of quarter expected for Titan. The stock too is virtually at record high. So we'll keep an eye out on 15.5% growth on the top line for Titan, and that would lead to about a 40% plus growth in the EBITDA. Margins we're expecting anywhere close to the double-digit margin, 10.2% is what our poll throws up, and a net profit of close to around that 300 crore mark is something that we're working with. So as far as Titan is concerned, remember during the quarter, the management has given us the fourth quarterly update as well. So for the jewelry business, which accounts for 80% of their revenue, we're working with 15 to 17% growth on the top line. And remember, this comes on the back of a strong base of 55%. Margin expansion out there would continue primarily because of increased contribution coming in from studded jewelry, the diamond business, which gives them more margins. As far as the watches business is concerned, the management during the quarterly update said that that's been doing fairly well. They are increasing their ad spends in the watch business, and the new watches, the technology-led watches, are doing well. So we'll watch out for what the revenue does out there. And in the eyewear business, that's been a bit subdued. The prescription eyewear has done well, but the fast-track sunglasses haven't done too well. So we'll have to keep an eye out on the operational performance there. Revenue is expected to decline there. Watches, revenue is expected to expand. We'll watch out for the margins and mid-teen growth seen in their jewelry business. The only problem with Titan, valuations, 40 times 2-year forward earnings. Let's see whether the company can deliver and sustain those valuations.
All right, Mangalam, it's going to be interesting because those valuations, now they're getting justified with all these other jewelers shutting down. So we'll keep an eye out on that stock. It's moved higher. In fact, it's moved quite well. Thanks so much, Mangalam. We'll keep an eye out on those set of numbers. Well, we'll slip into a short break. You come back, we'll get more earnings reviews as well as previews on the other side.